What's going on there, everyone? Welcome to the channel. Today I want to share with you one of my favorite stock setups of all time, and when you find one and you find one early, they have led to some of my biggest profits on any trades. And today we're going to look at the setup in SENS. The symbol is SENS. On January 28th, Friday, I let everyone in the Discord know I was buying Sensonic and that I bought the 250 calls dated out 3 weeks from right now. Now, the rumor is that this company may be seeking or maybe getting approval very soon for one of their devices. Rumors often lead to significant price movements, but more important to that, what made me want to decide to go long on this stock is this setup, which I'm about to show you. And if you can find one of these, the stock doesn't matter whether it's a stock, an index, it doesn't really matter. If you can find this setup and you can be patient and you can wait for it to trigger and confirm, you can have some significant moves with very low risk, and I'm going to show you how to do that right now. Alright, so this is the 1 year daily chart right here of Sensonics. And one of the things that I always like to watch for is consolidation zones. I call them boxes, and I like to draw boxes. You'll see that there was a previous box back here in July, and it broke to the upside. And so one of the easiest ways to kind of trade one of these boxes or consolidation zones is when they start to establish, which it did right here, you kind of connect the lows and you connect the highs. Now remember, I don't really believe in doing this to the penny or to the dollar. It's really kind of irrelevant. I know some day traders and scalpers will be very precise when it touches a moving average or when it touches one of these zones. I like to think of them as general zones, general areas. And the nice thing about these boxes is that the stock or the open market, the price action determines where those are drawn. All I simply am doing is I'm connecting the highs. You see this had kind of an outskirts high here, and that was one trigger actually, and it's very similar to what we just had triggered, but a little bit in the reverse. And then I kind of connect these lows. So a very simple trade. It comes into these consolidations. If it breaks above that box, you go ahead, you go long the stock, and you stop out as if it comes back in the box. Same thing on the downside. It's in the box, it's in the box, it's in the box. A very simple trade. It breaks outside the box. You go ahead and you short the stock, and then your stop is if it ever comes back in the box. What you don't want to see if you're doing that very simple first level trade, which often does work. You'll see back here in this box right here, you had this box zone right here. It broke out. You would have went long, and boom, it just ripped to the upside. Winner, winner, chicken dinner. And those trades seem to work fairly well. It's a breakout. It's no rocket science there. A lot of people are breakout traders are used to it breaking out. It's these consolidation zones that happen within ranges. But what seems to be a very, very profitable trade is when you get a cancellation of that. So what you have here is you have a consolidation box, consolidation box, consolidation box, and then boom, we broke down to the downside. And I did not get into this stock short at this point. It was kind of off my radar. And then I started watching it when those rumors started coming out. And when on Friday we got this is an engulfing candle, which means it took out this entire range. So I got into this trade Friday, which is actually a little bit early before this setup. But my anticipation was with that extremely bullish candle and with the market being overly sold at this point, is that we're going to get this trade set up right here, which is what I call a look below and fail or a look above and fail. So we had this consolidation zone, this consolidation box right here. The stock went down, it broke down, it gets everybody short, everybody gets short, and now it starts getting back into this zone. When that happens, that is the trigger. If we close today, and it looks like we're going to close today, remember I did jump the gun a little bit on this bullish candle, so this would be the first day actually that this is triggering this signal, which is the look below and fail. As long as we close inside this box, this is going to be reversal. And often these reversals are one, more consistent, and two, more predictable on their upside or their downside than even just a simple breakout. They seem to not fail as often. So the stop on this trade would be below this consolidation zone, which is in the 250, 255. Once again, I don't like to split hairs on pennies and cents. I'm just looking at a general area. I'm more of a swing trader, not a day trader. So you come into this box, you come into this zone, bam, the stock breaks down, it comes back in. So now what is the play? My play is long this stock, very minimum, if you wanted to take half off, would be to the top, back to the top of this box. The stop is if you start closing days back down below this, the trade is off, you cut your loss, you take your stop loss, you move on, fight another day. But it comes back into this box. And what I like to do is I'm looking for a measured move. My target is going to be a measured move. Now, how do you get that measured move? You kind of go in here and you find out where's that bottom of the box. The bottom of the box was somewhere around 255, 250. What was the lowest point on this move down? Right around $2, $2.10. So let's, like, once again, it doesn't have to be specific. I'm estimating here because it's going to give me a zone anyway. It came down about 50 cents below this box. And so my target now is going to be an upside target, which is equal to that same move down. So if we go to the top of the box, which is 298 to 3, let's just call it 3. We add that same amount, 50 cents to the top. That's going to give me 350 to 360. This is now my upside target on this move in Sensonics. So we had this breakdown and break up. This is a look below and fail type move. The first thing is look for this box. Look for this consolidation zone. Very consistent, similar highs, similar lows. And the longer this is, the more powerful this move is. Those of you who are part of the Discord been following along, we had a very powerful example of this on the other side where it consolidated for over a year on the IWM this last year, and we had this breakout up, and then we came right back down, and now we're feeling it here in January of 2020. We almost measured that move exactly back down to the downside. It played out perfectly. The longer these boxes are, the tighter these boxes are, the more consistent this pattern will be. But this is a classic look below and fail of a consolidation area. You have this consolidation area. We moved back down. Boom, we're back in the box. That's when that triggers. We closed today back in that box. This triggers along with an upside target of 350 to 360. Hope that helps everyone. Go ahead, follow, like, see ya.